alpha sources, or at least part of the alpha sources. The second lecture will cover off on the actual backtesting side. The basic, as I was explaining to before, the quant data pipeline involves basically taking data from some vendors, transforming it, doing research on it. If the research is fruitful, then incorporating the signal, well, as in fruitful in terms of the backtest, then incorporating the signal into a multi-factor model and into your portfolio construction. And that's pretty much what this second part, this overview, is covering off on. First of all, dealing with data, then creation of your alpha sources, your signals, and then thirdly, there's the risk modeling side. Fourthly, putting that all together. Basically, alpha plus risk model is your portfolio construction. And lastly, things like portfolio attribution is an important component to, or as in terms of feedback loop. So let's look at the just a bit of a quick view of the quant data pipeline. I pretty much actually mentioned it just then, but basically the idea is you do research, and the research will mean actually getting really quite down and dirty with the data. Getting down and dirty with the data, in fact, it's normally you're probably spending about 70% of your time mucking around with the data sets, making sure that you understand them and can control them in the way that you need. And once you have done that, then you can actually do your research. And it's typically the way in all areas of data science. You spend 70 or 80% of your time mucking around with that data, and then the fun stuff really starts after that. The idea really then is to once you've done all your research and you've controlled your data set, you then basically plug that into your model, portfolio construction, trade it, and then your portfolio analysis, and that's pretty much your pipeline. In fact, really there probably should be in this diagram a data section at the top, although it's kind of engulfed within the research section. I kind of like to think of quants as really being about us building robots. In fact, you can think of it like as a Japanese auto construction line, where the Japanese scientists actually make the robots that build the cars. It's going to come over here. Hello. So basically, we're like the Japanese guys that say it's Toyota or whatever, or Nissan or whatever, wherever they got robots making cars. Quants are kind of like the guys that make the robots. Once you've made a robot or constructed a quant data pipeline, then you can churn out your trades. But there is basically a flow which starts at the data, understanding the data, making sure that you're doing the right transforms, manipulating it, creating your signals, doing all your checks and balances and refinements before actually putting them in your model, so that they can be used to trade. So, as I've strongly suggested this, the data lies at the heart of quantitative investing, just like any other data science or big data or whatever. And it all starts usually with vendor data. And we'll have a look at some of the vendors. We'll actually we'll look at one of the vendors called FactSet briefly. Well, actually, no, we'll get to do a demo on that as well. Basically, what quants do is might have multiple different data sets from different vendors. So actually, any vendor can actually have multiple data sets in themselves, and we'll take them together and somehow manage to match them up together into one big quant database. We'll do various aspects of quality assurance on it just to make sure that the data's behaving the way that it should be, because you don't want to trade on bad data. If you're buying a stock because you think it's cheap, when actually how you manipulated the data caused a cock up in the process, you don't want to be trading on that. That's basically false information. You want to be trading on relevant information. Make sure that you've done your relevant transformations. And once you've done that, then you manipulate your data into your signals. You do quality assurance on that as well, and that's really where all of quant begins. So in this section on financial data sets, I'm going to cover off on 6 different things. First of all, where the data is actually sourced from, what types of data that there actually are, where you store it, how you actually manipulate it, issues in data management, and then lastly I'm going to do some demonstrations. And you can actually see an institutional scale vendor data set. It's called FactSet. They're actually listed on the New York Stock Exchange. They aren't small. You guys probably heard of Bloomberg. Have you guys heard of Bloomberg? Bloomberg, yep. Bloomberg's probably the most famous out there. They're famous for a number of reasons. Let's see, besides Mayor Bloomberg, well, he was ex-mayor now, he was the mayor of New York, but he founded the business, I think, in the early 80s or early 70s or something, and it's become dominant, and it's basically, Bloomberg is a very trade-centric data provider. And a significant number of a majority of the traders out there actually use Bloomberg to execute their trades. Well, having said that, there are other data vendors out there, and we'll briefly talk about that as well. So let's hit the next slide. So really, when it comes to quant, you need a primary data vendor, and they take care of all of the sort of complex aspects surrounding data, because data is messy by its very nature. It's very easy to come up to make mistakes, and having a primary vendor that deals with things such as tickers and ticker identification, and appropriately dealing with corporate actions in your data set, and we'll talk about that. That's one of the pitfalls. That's probably a question I might ask too, either in multiple choice or some other form. But having a primary vendor that takes care of a lot of your data issues does save a lot of headaches. There are sort of, I suppose, four big ones. Bloomberg, obviously, I've just mentioned, but from a quantitative perspective, quants don't tend to use Bloomberg. It's partly due to their accounting database is not bad. Their pricing database is pretty good. In fact, it's probably the gold standard, really. Their symbology symbology as in security identification is pretty damn good too. In fact, it's probably the gold standard. But with most other things, it's not up to scratch for what quants need. So quants tend to use Thomson Reuters, the first one, or FactSet, the last one. That's usually double the cost. So FactSet's quite a bit cheaper. CompuStats, I don't know if you guys heard of the S&P, Standard & Poor's. So S&P own CompuStat. So basically CompuStat don't just do accounting data sets. I think they do the whole, actually it's Capital IQ, and they do the whole shebang. So that actually should read Capital IQ there rather than CompuStat. You'll also get data from other vendors. They could be from benchmark providers such as MSCI or FTSE, which own LSE, London Stock Exchange, and of course S&P ASX 200, which I think is a JV between the ASX and Standard & Poor's. And so having a benchmark from which fund managers need to be measured against, although not all fund managers get measured against benchmarks, is important. And that's a good example of a non-primary data set. One of the other main non-primary data sets, or vendors are actually brokers. Does anyone know what brokers do? Any ideas? You? Your mate reckons you do. So what a broker will do will help you execute your trades on market, and whether it's through block trades or through direct market access, DMA. They'll also, if they're a full service broker, they'll provide research. They'll also have a bunch of research analysts covering particular sectors, sort of mirroring what the fundamental analyst teams do. And they'll they'll come up with their own forecasts, and those forecasts actually can be very useful. And those particular forecasts are typically forecasts that quants will use on scale. And so there's probably, I don't know, maybe 4,000 or 5,000 stocks globally that are covered by brokers, and in terms of their broker forecasts. And what quants will do is we'll suck that in. But we need to make sure that whatever identifiers the brokers have, in terms of, say, it's BHP space AU, that's BHP, the Australian line of BHP, we need to make sure that we've matched that correctly against whatever identification system we've got internally. So that might be something known as CDOLs, it could be ISINs, if you're in the US it's QSIPs, so as well as the local ticker. So there's a number of different unique identifiers that when you start incorporating different data sets, the trap is to make sure that you don't make a mistake of linking them up inappropriately. So what some of the things that a primary vendor will do is they'll give you data sets, lots of different types of data sets, and typically that would include an accounting data set. And so, for example, WorldScope, which is actually owned by Thomson Reuters, which is those guys. I mentioned Thomson Reuters and FactSet as being two key providers. WorldScope is probably the gold standard for quants what WorldScope do is they'll take account of what industry the company's reporting in. So if it's a bank versus an insurance versus another financial or an industrial, and they'll put the company accounts in the relevant template. So if you try to stick an industrial stock into a bank stock, it doesn't make any sense. Square peg, round hole. But being able to consistently do that across all the different accounting standards globally and is of critical importance. Does anyone know here what the sort of two main forms of accounting standards out there are? No? Anyone heard of GAAP? US GAAP? IFRS? So basically it's almost like the US versus the world. Everyone else is on IFRS, and then there's GAAP. And the International Accounting Board, or whatever it is trying to converge the two different accounting standards. But you do get differences because in how companies report even items such as sales. There's actually negotiations at the moment on aspects about converging the definition between the US GAAP system and IFRS. So basically, US are on their GAAP system, and then they've got IFRS, which is now pretty much the rest of the world. Australia joined IFRS, I think it was in 2005. I think Japan is most of the way there or something. But having one accounting standard so that you compare apples with apples is critical, and that's where that accounting data set comes in. And what WorldScope does, and FactSet do this as well, is make appropriate adjustments so that whatever you're reading in the different with your different companies globally. So you might have one company that's listed in, say, in London versus another company that's listed on the New York Stock Exchange or Amex or NASDAQ or whatever. And they'll have different. They might be reporting in the same industry, but they'll actually have some of the numbers aren't actually comparable, and that's one of the tricks. So. That's a bit of critical information with regarding. Well, it's one of the traps, I suppose, in quant. surrounding the accounting standards. There's, besides accounting, which obviously is the critical feedback loop for listed companies to tell its shareholders how it's doing, there's also market data, which is kind of like how the investors actually do react to that accounting information that comes out either quarterly or semi-annually or annually. In Australia, of course, it's semi-annual and annual. In the US and a lot of Europe, it's quarterly. I think Japan is semi or quarterly. Market data, that's prices. So whenever you're watching the news at the end of the day and it's saying, you know, this stock was up or down, they're talking about share prices. Besides share prices, there's also volumes. How much has a stock actually traded that day? And also another good example of market data is actually market capitalisation or size. And I was talking about size before, and I was talking about that from an economic perspective. So whether you measure it by sales or total assets. Probably the most commonly used size metric is actually market cap. And how do you calculate market cap? Well, you take the number of shares and you times it by the current share price. And so I think, you know, all those companies I mentioned before, BHP, Rio, the big four banks, they are the largest companies in Australia by market capitalisation. And they're also the largest companies in Australia by economic profits. And so basically over time you would expect that the share prices actually reflect the economic profits. So there's almost like there's two layers to what's happening in the market. There's like what's happening at the accounting / fundamental perspective, and then there's how the market actually reacts. And there's a behavioural human interpretation aspect to that, and how they interact is critical. And that's one of the things that us quants try to prey upon when there's a disconnect between the two. So the next important data type is actually consensus forecast, and I touched on this before. Basically, when you get broker forecasts, forecasting, say, the earnings of a company or the sales or what have you, and they do forecast a significant number of items. This can then be ingested, well, this will be forecast by various sell-side analysts, so whether it's Macquarie or UBS or Goldman Sachs or Bank of America Merrill Lynch or Citigroup or Deutsche, they're all sort of the top-tier investment banks. They'll all have their own sell-side analysts making their forecasts, and this is an important data set for quants, because it basically gives us a window on the sentiment in the market, and quite often sentiment is slow to evolve, and taking advantage of that is one of the things that us quants do. Second, lastly, because I'm going to go back up to this one at the top, is benchmarks, and I have already mentioned about some of the benchmarks in Australia. That should be the S&P ASX 200, and then of course you probably heard of the S&P 500. You guys heard of S&P 500? Yep. So that is a major benchmark in the US, but actually, funnily enough, Russell is actually also extremely popular, but you don't often hear about that. And then the MSCI World, or FTSE for global markets, and of course FTSE 100 for the UK, which is basically the large caps, the big stocks in the UK. And then lastly, well, not leastly, although I wish it was, because this is really the bane, is the reference data set. And I was talking to you before about the security and entity identifiers, and making sure that you're actually appropriately identifying a security so that you can match across the different data sets is critical. You start match if you make a cock up in your matching, then say for example you match one data set. Say there's actually a number of lines of BHP, for example. There's BHP AU, which is I think slightly larger than the BLT LN, which is the London version. And capital is actually raised in both markets, but it's slightly less in the UK. Rio, on the other hand, Rio Tinto, slightly larger in the UK and slightly smaller in Australia. And actually, on top of that, there's also the depository receipts on the New York Stock Exchange. Have you guys heard of ADRs? American Depository Receipts or Global Depository Receipts, GDRs. Basically, effectively, it's taking a small parcel of shares, say that's listed on the Australian market, and then going right. A custodian will say, right, we're going to keep this, but then we're going to keep this, and we're not going to move these shares, and then we're going to make these shares available to trade on the New York Stock Exchange. So basically, a pool of shares which do not get touched, and then they say to the New York Stock Exchange, we want to basically list these so that anyone in the US then can then start trading BHP shares through the New York Stock Exchange through this relationship with the custodian. All right, that's data types and reference data, fun stuff. Oh, and symbology. Look, I just make one other comment too. With regards to symbology, this whole area is starting to change for the better, actually, in terms of the Bloomberg have just recently opened up their security identification. When I say open, I mean as in free. So basically, anyone globally can actually hop onto the Bloomberg website and grab data about different securities, and FactSet are also going this way, and it looks like Thomson Reuters are going this way as well. It's going to make it a lot easier for quants to match data appropriately historically. It's been a bloody nightmare otherwise. All right, data storage. So, and this is kind of like the arena of the data scientist, really. Where do you keep your data? Well, usually in an Oracle or Microsoft SQL database, or sometimes MySQL. Have you guys heard of Microsoft SQL, Oracle? No? Yes, some. So a lot of the databases, a lot of the data that's being collected by your phone will be stored in databases, or when you surf the net will be stored in databases, and the types of operations that these guys these databases are doing are quite phenomenal, and in the realms of computer science. From a quant perspective, we deal with less, probably not. Well, I suppose you could characterize quant as medium data, not necessarily big data, but it is all the type of statistics and analytics that you would see in big data is the stuff that quants use on a day-to-day basis. So we typically store our data sets in a SQL database, and you can actually purchase these from vendors such as Thomson Reuters and Capital IQ, as well as FactSet. And the idea is that is you suck the data via FTP. Have you guys heard of FTP? No? FTP feeds? So basically it's like flat files on a server that say it's on a Thomson Reuters server or a FactSet server, and you basically poll for whether an update to the file exists. If it does, you suck it in to your database and you process it, and then the data is actually on your database and you can do something with it. These tables will contain reference data, accounting data, market data, estimates, basically. So in the next slide, I'm actually going to show you a screenshot of a SQL database. Hopefully it won't scare you too much. So just to, it's not exactly that clear, but down the sides of this column here are the different tables in your database. And in fact, the FF there actually stands for FactSet Fundamentals, which is an accounting database. And then whether there's ratio tables, there's tables that have got your sales, your profits, your common equity, all of the stuff that goes into calculating all your typical quant factors from an accounting perspective are here. And so in this particular case, I was mucking around with the FactSet accounts, and I was just drawing out basic information regarding this identifier. Now FactSet have got their own internal unique identifier called FactSet Permanent Security ID. This one here Anyone can guess? Anyone guess what this might be? I have mentioned this stock. It's BHP. So this, all this information here is showing a time series of annual data. So there's your security identifier. It's the same one all the way down. There's your date, and I think that's 2014 there. And then if you look across, there's a whole lot of different fields there. I'm not sure if the connection. I think sales is further along, actually, but basically there's all these different accounting items that you would have if you've done accounting courses, all of the different accounting items appear in this data set. Is that scary? It's not too bad. Get used to it. Initially, it's a little bit scary. The idea really is to take all the different tables on the left-hand side and, where appropriate, make various joins. And so it's basically like reading this is select the top 200 rows from this particular table where the ticker, in this case FS PermSec ID, is BHP. And that's pretty much how you read it. So it's actually, once you start programming in SQL, SQL is an important skill set to have in Quantland. It's actually really a critical skill set to actually have in Quantland. All right, I think I probably talked about this a bit anyway, but the next bit is about manipulating data. So SQL is the default language for quants in terms of storing the data sets. But if there are actually a number of packages, and I've already mentioned them, Python and R, which are very powerful in taking that SQL data set and doing pretty much run-of-the-mill mill operations on the data set, and that are critical in coming up with your factors, but are mundane in that you do it all the time. For those of you who have heard of Python, Pandas is probably one of the most useful Python packages for a quant analyst to muck around in. And the whole Python as a language is Python as a language has become increasingly popular. In fact, it's probably one of the most. I think it's the most popular, one of the most popular quant programming languages out there, if not the most popular. All right. I think I've actually covered a lot of the symbology side as well. Basically, well, this is actually a quote from the Bloomberg Open Symbology. What's that? Bloomberg Open Symbology, basically. And basically, there are lots of different systems that fund managers have actually built around the world that don't necessarily, don't easily talk to each other. If you had one system, one identifier that actually globally identified a particular security, then your life would be significantly easier. And Bloomberg opened up their own symbology data set in aid of making life a lot more easier. So yeah, as I said, symbology is about correctly identifying traded securities across different vendors. And QSIPs tend to be, well, QSIPs are used in the US. It's operated by S&P, and CDOS is a London Stock Exchange generated global identifier, and ISINs also is kind of reasonably popular. And it doesn't just cover equities; it covers fixed income and other asset classes as well. And then, of course, there's your local ticker, which in this case for BHP is BHP AU. Alrighty. So whenever you build a quant data pipeline, having the appropriate checks and balances in place is critical, which is basically what quality assurance is about. Basically, quality assurance is making sure you get the data when you expect it, i.e. timing QA, that you get the coverage in your data set